This man is absolutely obsessed with work, Jensen Huang. He lives, eats and drinks Nvidia.
Yeah, if you'd invested $10,000 in Nvidia in 2013,
it would become 3.8 million today, one of the third biggest company in the world.
graphics, unit designs, AI infrastructure, the most powerful chips.
76% of their employees are millionaires.
Absolute genius.
It's gonna completely revolutionize the world. But again, the risk is high.
My biggest concern as an investor is
What's going on could actually disappoint investors.
we'll help you to do your own research here. Welcome to the latest episode of the Intelligent Wealth Podcast. I'm really excited about today's subject, which is Nvidia, really in the news. And as usual, I've got my two top quality attendees, Carl Roberts, my fellow director in Minerva Money Management, and our head of research, no less, Awet Gourmet. So this podcast is for serious investors, people who want to learn new things to help them in their journey to research for their own investments. So we're going to come out with our own opinions today. Don't take that as advice. In my experience, the best returns are when you follow your own research. Don't follow someone else's tips. No matter how great the investor, it will invariably go wrong because they've got different attitudes to risk, different timescales, etc. So we'll help you with the tools to do your own research here. So with no further ado, let's get into the main topic of today, which is Nvidia, very much in the news. It recently became the world's largest company by market cap when it hit $3 trillion. Incredible. It's come from nowhere. But this is no surprise because they've got an enigmatic leader in Jensen Huang, I think it is. Now, it's hard to say. There is a management, but it is very much a one-man super force, which is Jensen Huang, because he's worked for this company for many, many years. I think it's a few decades now. And he is absolutely obsessed. He's one of these charismatic leaders who's, how can I say it, a bit dictatorial, really, I'd say. It's not a conventional way of managing a company whatsoever. He does do micromanagement, which is incredible for a company this size. He has about 60 managers that report directly to him. He doesn't have someone else in between him and those managers. And guess what? They all have to report to him by email on a daily basis. And he replies to all their emails. Now, I hope he doesn't get 60 a day, but he works his socks off. I mean, this man is absolutely obsessed with work. I got in trouble with my first marriage by being obsessed with work. The first 2 years of my business, I worked 100 hours a week. Eventually, it ended in a divorce. Now, this man, I think, is still happily married. Awet might correct me. But he lives, eats and drinks Nvidia. Apparently, he can't even go on holiday without still working while on holiday. He's totally thinking about Nvidia all the time, totally obsessed. And the man is an absolute genius. It's no luck that they've got to where they are dominating in this space that Awet in particular will give us a lot more detail on in a moment, because he's planned it out meticulously. He plans years and years in advance, and he doesn't get everything right. He does make mistakes, but generally the direction he's going in, he always seems to be years ahead of his opposition. And whilst he's still in charge, with skin in the game, he does have a reasonably small but good size shareholding. He fits all the criteria of the type of manager or visionary founder owner we want in companies we really like. Now, we've been very reluctant to be invested too much in Nvidia in recent times. We held a good sized stake probably about a year ago, and we sold when the share price went to giddy heights. We only re-entered the market and bought some more shares, a small holding, about 2% of the fund, about 6 weeks ago when we had the market correction because of all these tariffs. We're still a bit nervous that it's a bit highly priced still, but not as excessive as it was before. So that's my take on management. So it's a bit brief, but I don't think I need to go into much more detail than that. This is a very unusual structure led by a maniacal man in many senses. I mean that in a nice way, but tremendous work ethic. And the other thing I found interesting was that if he's in the office and someone has done something wrong, he won't hesitate to give them a dressing down in front of everybody else. Now, personally, I don't like that kind of thing. I think you should do it behind closed doors. I just think it's rude. But what they have is a very open culture, all led from the very top. So they're not afraid. They won't mince their words. They won't try to be all political. And I think that's why one of the reasons we've been so successful. They're not afraid to speak your mind and tell the truth to one another. In big companies, it's all politics and it all tends to get hidden. And then they end up becoming less and less effective as they grow. Jensen Huang is still running this company like a small business.
Right.
So I think that gives you a good idea of the character of the man and the character of the company and why it is where it is. So what I'm going to now do is hand over to Carl, who's going to talk about a few more aspects of Nvidia to put more meat on the bone now. And we'll add in our comments as we go along. Over to you, Carl.
Yeah, I think it's worth pointing out as well with Jensen Huang that I think he was the co-founder as well, wasn't he? And still CEO since its inception. So we always obviously like that. Visionary founder with skin in the game still. He's regarded as one of the best capital allocators in the world, which Awit will probably mention a bit more later on. And I think a key point to make is, he's got this foresight, hasn't he? He's been pivoted the company a couple of times over the last couple of decades. Went big into gaming when the gaming really took off with these really high power graphics units and things, and then he's obviously foreseen the trend towards artificial intelligence and building the kind of software and chips behind all that. So he's really put Nvidia at the front of all this technical innovation, which is really interesting to have that foresight. But in terms of Nvidia, I mean, it's come from nowhere in a way, hasn't it? I mean, obviously it's been busy building in the background, but I think if you had asked most investors 5-10 years ago, have you heard of Nvidia? I don't think that many would have heard of them. But the classic way we look at some of this is if you'd invested $10,000 in Nvidia in 2013, it'd be worth over £1 million today, which has made it one of these magnificent 7 stocks. So it's really just come from nowhere the last kind of 5-10 years, and it's now on a par with the likes of Apple, Microsoft, Alphabet, Amazon, and the other magnificent 7. So I mean, in terms of what else do we look for in a great company, one of the key things is obviously competitive advantage. And I've already mentioned that slightly in that with the visionary founder, the way he's pivoted the company. It's widely kind of thought that Nvidia is at least 12 to 18 months ahead of its rivals in the graphics unit designs and the software support behind that. And it's also got this first mover advantage in the AI infrastructure. So more recently, it's gone big into the AI kind of data centers. So I think in terms of its competitive advantage, it's just got the most powerful chips running the most in-demand kind of software and structures in place at the moment. And now on top of that, it's obviously building a massive brand around it. So, everyone wants now a piece of Nvidia. All the other big tech companies all need Nvidia. As Google and Facebook go into AI, they need Nvidia because Nvidia's got the greatest and best chips and software at the moment. So I think that's its kind of competitive advantages.
Yes, very true. Very true.
Yeah, I think Nvidia is one of the most admired company. Is one of the third biggest company in the world. And as you mentioned, Carl, as well, if you invested in the IPO in Nvidia, 10,000, which is a long time ago, it would become 3.8 million today. That's a compounding annual growth rate of 28.6%. So first of all, I think what we need to understand with Nvidia is the business model. What kind of business model is Nvidia is a fabless model, which is it means they design chips and then it goes to be produced by companies like Taiwan Semiconductor. So Nvidia is the designer of all of these chips, but in return it makes significant margin from designing those chips. So when we look at the top Tony mentioned, visionary founder Jensen, he still have significant holding in the company, 3.5%, and all insiders have 3.9%, which is valued $113 billion. That's significant skin in the game. I think that's what we look for when we invest in companies. Insider alliance is very important. And when we look at the growth prospect, for example, in terms of artificial intelligence, the market is expected to grow 38% compounded annual growth rate from 207 billion in 2023 to 1.8 trillion in 2030. So there's a huge growth for artificial intelligence. We can see. I think Jensen Huang he said it recently. Physical artificial intelligence in the future would create 50 trillion market, and I can see that. I think AI is becoming very critical, and I think is gonna completely revolutionize the world. Especially, I can see. I think the first thing you can see is the way is increasing our productivity. So I am quite optimistic the way AI is going forward, and Nvidia is the main beneficiary from here.
Mm. My biggest concern as an investor is the valuation level. Particularly reminded saying by Jim Slade, elephants don't gallop, but fleas can jump 100 times their body height. It does make you wonder how sustainable it is, because the greatest growth obviously comes from smaller companies. They've got far more to grow. So I'm glad when we bought it when the price had dropped back to more realistic levels, but it's still, even today, fairly highly valued. And that's my biggest worry. Microsoft went through a phase of 16 years where their share price didn't rise. The company kept making profits year after year after year, and their profits were increasing. But the reason the share price didn't increase, because it was so overvalued 16 years prior, didn't have scope to grow. Now, Howard, do you think Nvidia's in that same position or
Um,
not?
for now, if you look at the forward PE ratio, I mentioned it is still fairly valued. Especially the assumption the market is implying is Nvidia would grow at 35%. If they can pull the 35% growth rate and continue to do it, though, as we mentioned, artificial intelligence is expected to grow 38%, which we think in the short term Nvidia could do it. That implies what was going on in the world, like the trade war and so on. If Nvidia can pull this, yeah, the valuation is reasonable, especially when we look at future valuation. It's not too expensive at this stage. But again, any trade war what's going on could actually disappoint investors.
Yes. Yes. The other big threat would be if something happened to Jensen Huang, of course, because he's the whole driving force. And it's rare you can get a CEO to take over from an existing visionary founder owner and succeed. That it has still happened. I mean, Microsoft managed when Bill Gates resigned, and also what's another good example? Oh, Apple. Apple. Although Tim Cook's a very different CEO to Steve Jobs, but they did manage to continue and become more and more successful. So it is possible, but I do think you're very dependent on that visionary founder owner. That is definitely a threat.
Yeah, it's definitely a risk, because you actually saw with Microsoft, actually they did go for a bit of a lull. Was it
They
Steve
did, yeah.
Ballmer? They tried to get into smartphones, failed on that, didn't they? They failed with a lot of Windows upgrades, and it took the recent guy, I can't remember his name now. He's kind of turned it around, hasn't he?
Yes.
Microsoft in the last
Yes.
few years. So yeah, you're right. It's a very difficult transition when that's the only problem with your visionary founder, is that as they get towards the end of their career, have they put a good enough, sort of succession plan in place?
Yes.
Yeah, I think the good thing is about Nvidia, they have a software ecosystem which locks about 6 million people, developers. So that's very unique
Yes.
in comparison to
Yes.
other companies. But historically, the risk is everywhere. I think, especially in the semiconductor high technology, the risk is high because there's is a very profitable, and capitalism is brutal. If you're very profitable, someone will come in to take your profit. And the main risk I see is actually because Johnson is still young. The biggest risk I see is from China, as we've noticed
Yes.
recently. Companies like Huawei, because the restriction, they are forced to come up with new technology that match Nvidia chips. I think I personally see biggest risk is not the CEO, but the emerging competition from China. Because we can see companies like Huawei and others are coming very close to Nvidia chips.
But
And
also, isn't the issue now not so much about computing power. It's more about energy. The biggest constraint is energy, because AI is going to use up huge amounts of energy beyond anything we've ever envisioned in the past. The leader in the world in energy provision, both fossil fuels and green energy, is China. They really do have a massive advantage, and that's going to be the biggest constraint, not the who can produce the smallest semiconductor or chip. Don't you agree? That's the issue.
Yeah, I think Google CEO recently came out and he said AI is currently using 3% of the world energy. In the future, it's going to consume the whole world energy, and that's why one of our teams is to invest in energy for the fund, because we can see the opportunity for energy. AI is consuming a huge amount of energy and water, and we need them.
Yes.
I think investment in those sort of places are very critical.
I'm going to be controversial here, but clearly wind and solar aren't going to hack it, are they? Not in a world where we're going to have such huge energy demands. Let's face it, China's dominating because they rely on fossil fuels to create the green energy dominance that they have. They're creating 2 new coal plants a week, for example. So something substantial's got to change, and I think it must be these nuclear reactors, mustn't it? These small nuclear the new, modern, safer small nuclear reactors. And you're finding some of these tech giants are actually buying them up, aren't they? I think we had a couple of examples recently, didn't we? I can't remember which companies it was. You'd probably remember.
Yeah, I think Amazon.
Yeah, and
one.
Microsoft.
The good thing about that is, though, that because of that such high demand for energy, like you say, and bringing these big tech players into that space, hopefully that's going to drive innovation in the energy area. Because at the moment, we're probably big companies in China, that they're okay to rely on the fossil fuels and things, but obviously at some point, that's probably a limited supply. So, but like you say, Tony, the wind and solar doesn't seem to cut it, consistently enough. So these companies are going to have to start, putting tons of money into innovation in energy to find something that is renewable and profitable and works. So
Also, I think Trump's idea of limiting American companies' ability to sell semiconductors to Chinese companies, it just isn't going to work, because I saw a survey the other day, and it showed that in technology, China was ahead of America in virtually every sector. And they've got some innovations that leave me breathless. Really, they've got that Chinese car manufacturer. Is it BYD?
Yeah,
they've got a battery charger now that can charge up an electric car in 5 minutes. My Tesla, when it's empty of charge, takes 14 hours overnight in my house, and at a Tesla supercharger station, it takes maybe up to an hour. I mean, that's just one example. They're way ahead in any other areas.
Yeah, I think China is considered to be very ahead in terms of application of AI, but in terms of access to sophisticated semiconductor, which is less than 8 nanometer, they still behind, but the application they still ahead. So there is a war, I think, of technology war. Whoever wins this war will pretty much be the biggest beneficiary and application of AI using it in military and so much and so on. So I think that's the biggest risk that the US see. That's why they're trying to restrict access to semiconductor to China, and that's why companies like Nvidia and other semiconductor companies they have some restriction.
And tariffs as well. I mean, I think this has had an effect on Nvidia. Jensen Huang recently did say that it was going to have quite a big effect on their revenue, the tariffs. But luckily, Trump is going back on that now, isn't he? It seems to be a 90-day strategy to put together the deals he wants by starting off with ridiculous tariffs to bring all the other countries to the table. So that could have been a big threat to Nvidia. I think it's less so now. Do you agree, guys?
Yeah,
I think so. I think it's worth just going back to the valuation for a second, because I think Nvidia's valuation, it's almost like some people will say it is priced to perfection, but at the moment they seem to just keep hitting those targets and then some. So it's kind of just keeps growing into its valuation quite nicely. But whether obviously it can continue sustaining that, it's difficult. And like you said, Tony, earlier, yeah, it's always better to, if you could, buy all the smaller companies that have definitely got far more room to grow. It would be much better to have bought Nvidia back in the early sort of 2000s, but of course no one does, because that's when it's the ultimate risky punt at that stage, isn't it? No one can foresee. If we could foresee where it was going to get to, then of course we'd all buy it. So that's the reason why we don't all buy small companies, and everyone gets it right all the time. But in terms of it being quite pricey, I did a blog recently, and it's worth it's interesting understanding just how often the market does trade close to its all-time highs.
Yes.
And what I found was in the last 70 years, this is S&P data, but the S&P 500 spent approximately 44% of its trading days within 5% of its all-time high. So nearly half the time, the market is trading pretty much at its all-time high. So it's just worth remembering that even when you do look at kind of what perceived as an expensive stock, just bearing that in mind. Although obviously there can be mega way overvaluated companies, and the market does get it wrong. But if you feel the market's priced it fairly accurately, then you don't always want to worry if it is at the top end, because if you hang around for these corrections, they can take quite a long time to come.
Yeah, I think even if you look at the valuation, let's look at forward valuation. It's trading at 27 times earning, which it's not too expensive. And forward, I mean, again, price to free cash flow 30 times. So it's not too expensive for a quality company.
It's expensive, but not too expensive, like you say.
It's what you compare it to, isn't it? So it's expensive if you compare it to a value company. So a company that, might traditionally trade 15 times earning or something. But if you're comparing it to a growth, right at the cutting edge of technology, then you've got to compare it to like for like, haven't you?
If we compare it to Tesla, for example, it's cheap. I mean, Tesla has been way overvalued for so many years, hasn't it?
Yeah, I think the problem you have as well, like the index fund industry has been growing in the last few years. And I think there's an automated buy share, especially like the biggest company like Nvidia, which is the third biggest company in the world. They get bigger allocation. I think that's one of the main reasons as well driving the share price.
Yes, of course.
So I think even though the valuation is a key aspect, but the automated index buy is just pushing the price, and we can see that's a trend moving forward. And I think that's the difficult part now. It's not the valuation, but the automated index buy.
I think as well, it's worth saying that this is a highly profitable company. This isn't a high growth, high valuation for all a promise of future. There is part of that baked in, but this is currently, even today, a highly profitable company. I think it might correct me, profit margins, aren't they, around sort of gross profit around 70%, net profit about 50%. These are just incredible margins for the amount of for the kind of market it's in.
Yes.
Yeah. I think Warren Buffett would love this sort of stuff. If you read his books, he always love, gross margin, because the good things you have is when your gross profit is high, you are not vulnerable to any price movement. You can still raise your price because 75% gross profit is significant. And even when we look at, you mentioned earlier in terms of capital allocation, it's exceptional. In the last 5 years, if you look at return on capital for Nvidia, is on average is 70%. That's really a huge
That's incredible.
number. Yeah. And then when we look at return on equity on the last 5 years on average is 62%. So
these
this
are
is
remarkable figures, and the companies that are able to maintain those kind of figures, return on capital employed, multiple of free cash flow, etc., they really do tend to grow. And what you find is that the companies that are using Nvidia products, they've tried to do it themselves, and they found they can't compete because Nvidia is always so far ahead. So it's expensive to move away from Nvidia. That's what gives them this strong moat that we call it, this competitive advantage.
Yeah, I think they are deeply embedded in especially in training AI, the technology.
Yes.
And I think they will be in the next few years until someone could come. Because I think one thing we need to realize is Nvidia is not like Apple, which is Apple is business to consumers, where Nvidia is business to business, which is
Yes.
most business are driven by price, not loyalty. Where if it's business to consumers, consumers tend to be more loyal to buy Apple product in the future. For example, in comparison to Nvidia, businesses are price driven, and we can see companies like Amazon and Meta, and they are the biggest customer on Nvidia. So they tend to be price driven. At the same time, they are designing their own chips. So that's the biggest risk for Nvidia moving forward.
Yeah, yeah, that's true. Yeah, very true. They do have a lot of business with those large tech companies, and you could argue. I think it's something like 4 of the giant tech companies make up something like 40% of their turnover.
Yeah.
So you could argue that's another business risk if suddenly those giant tech companies were to stop using them. But there's no sign of that at the moment. Without being complacent, they seem to still have that edge because of Jensen Huang's great foresight and obsessive work.
Yeah, it's worth mentioning as well. They ploughed a ton of money into R&D, don't they? So, which again is what we like. Go back to that sort of capital allocation. I think it's over 20% of revenue goes into R&D. There's little in the way of dividends, isn't it? Because most of it cash is ploughed back into R&D. Especially, I think on share buybacks, aren't they starting to increase that slightly? Which is obviously another way of obviously improving returns for shareholders.
Is that right? Are they doing more buybacks now?
I think so. I haven't looked into that figure, but yeah, they are, because they do have significant cash in hand. So the buyback would be something that they will consider, but I haven't looked at if they are considering buyback.
Yeah.
Um,
For the listeners, we like companies that buy back their own shares, especially if they buy them back at good value. That's the key, and that's going to be tricky for Nvidia to do. The price keeps rising.
I can give you a figure, like for example, in the last 5 years, they did buy back around 1.3% in on average, and the shareholders yield has been 1.5 percent, which is they still doing a little bit of back, not significant, which is they returning to shareholders in terms of dividend and debt repayment and buyback. So 1.5 historically they haven't done a lot, but moving forward they do have the cash and they do have the capital. They are very profitable. They're more
Yes.
likely to do so. I haven't looked into that figure yet.
Yeah, but it's like Buffett always says, though, isn't it? Because they're dealing in such large revenue numbers now, and obviously they do put a lot of that back into R&D. But if there's nothing else to buy, because I think they did at some point try to acquire Arm, and I think that deal didn't quite go through. But so if they can't find, it's like Buffett always says, they can't find anything else to buy, you're going to try and buy your own business, aren't you? If it's at a decent value, so that's kind of one of the angles for Nvidia potentially in the future.
And that alone, buying back your shares can have a significant impact in growing the share price. So that's a really good point, Carl. Totally agreed. Yeah.
Yeah, I think sometimes as well, we spoke about management and you mentioned, Tony, about culture. I think Nvidia tend to have a good culture. I mean, I did go to Glassdoor to check what the employee thinks about Jensen, and it seems he has quite good review. 93% on Glassdoor. People recommend for working for Nvidia, and I think internally there was a survey has done. Nvidia actually made 76% of their employee are millionaires, and 33% of them are worth more than 20 million. So over time, I think Nvidia has rewarded its employee and they made them quite significant shareholders. As we said, what we learned from Constellation Software is if you make the employee shareholders, suddenly the incentive is changed. I think that's what we see. They have the drive to make this work, AI works, and because they have significant stake in the business.
What's remarkable is that those employees haven't decided just to retire because they could. I mean, that's another endorsement for the company that these multimillionaire Nvidia shareholders still want to work for Nvidia. That says a lot about them, doesn't it? Because most people, when they come into a lot of wealth like that, would probably want to retire, but not if they're working for a company where it's very passionately driven by the visionary founder owner, Jensen Huang. So, yeah, interesting.
Yeah. Yeah, the thing is, I think if most of them, I believe, they are mission driven. They wanna make this AI, and they wanna work for the company. But yeah, if the only reason is to make money, they will retire. But I don't believe that's the case with Nvidia's employee.
No, it's a really good sign. Of course, Glassdoor is the website you use to rank your employer or past employer. And that's what they're basing this on. Good Glassdoor ratings means that the employees and past employees rate the company very highly. So that's a really good accolade. I've always felt that it's your people is the most important aspect of your business, because all businesses are just people, aren't they? At the end of the day, you have to have a great team. And I think the fact that Jensen Huang is very straight and honest, although it can be quite disarming if he's going to just dress you down in public. But at least it's very straight. He doesn't bear any grudges, and after telling you what he thinks, you'll make sure you do everything right. What he doesn't suffer, he doesn't suffer fools gladly, and he won't suffer people not giving him the truth, giving him all the data that he needs. He won't let them fluff around and mess him around. They've got to be straight and admit to mistakes, and they're willing to and ready to admit to mistakes, because they know that that's what he wants. That's the culture he wants, of honesty and passion. And I think that's really, really refreshing in such a big company to get that culture.
Yeah, I think culture is key. I think even like one thing like soft facts, like as we mentioned, going on Glassdoor, because I think there was a company that we sold recently. When I went on Glassdoor, and what I saw was the company was very profitable, but the employee were not happy. And I think that tells you something about the company. If employees are not happy,
Yeah,
they're more likely not going to do a great work. If they don't do a great work, and the company would not succeed, even though the company was very profitable. And so always, I think one thing you learn is this: we don't take we mostly focus on the financial, but we don't take seriously the soft facts like
yeah.
employees and
But you
happiness
can
and so on.
and you can tell normally when you go to a company and you experience the service, you can tell whether they're happy or not. They go into an Apple store, and the staff are happy. They always are, and they're always very helpful. There's a company that I use. I won't give their name. It's a small UK company. I ring them up, and the receptionist, when she answers the phone, she answers the phone to say, "I'm having a great day." The trouble is, she never sounds like she's having a great day.
Right,
And so I always pull her leg and say, "It doesn't sound like you're having a great day." And then she defends herself, says, "Oh, I am having a great day," but there's no passion in her voice, so she clearly isn't happy. Um, Whereas I think with Nvidia, the staff are happy. It's a great service, Glassdoor. I think we use it as part of our research for every company.
Yeah. Yeah, I think what we probably need to talk about is well balance sheet. I think I have a few things about balance
Go on
sheet.
then. Go
Yeah,
on.
when
Go
we
ahead.
when we look at like in terms of debt and so on, Nvidia doesn't have much debt. They have cash reserve around 43 billion, which is Carl mentioned as well earlier. That cash reserve you will have to either allocate at high return, which is they are spending for R&D, but it's not
Yes.
significant. It's significant in proportion for the company, but it's still in comparison to how much cash they have. So, and net cash, they have 34 billion, which is purely they can use it to, pay dividend or allocate it properly or give it back, buyback. Debt to equity ratio 0.1, which means 90% is financed internally. Only 10% is using debt. So still, it's not it doesn't they don't have high leverage in terms of their finance, so they're not vulnerable to any exogenous shocks that comes in the future.
Yes.
They have a robust balance sheet. Even when we look at interest coverage, it's more than 300 times. So there is no risk in terms of a short-term financial risk that I can see from assessing the balance sheet.
Yes. That's good. As we expected. What about the stock-based compensation? Do they use that much?
No, historically they haven't used much stock-based compensation, so I haven't seen much of that in terms of giving it to an employee. No, not much.
That's good, because that distorts profits, doesn't it? It definitely is a cost to a company if they use that a lot. It doesn't show up in the gap accounting. Anything else to add, Awa, about the balance sheet and the profit margins? Anything else to add?
I think what we probably there is quite a few. I mean, ESG we haven't mentioned like in terms
Yes.
of ESG. As we said earlier, we do assess companies in terms of like the impact on the environment and sustainability and so on. So we use this website called System Analytics, and from what I could discover is they have low risk, because the reason is Nvidia doesn't manufacture the chips; they
Yes.
are designer. So then the chips would go to companies like Taiwan Semiconductor. So they are pretty much ranked the fifth out of 372 semiconductor companies. So they have, they are pretty much the top in their group.
That's excellent as well. How about you, Carl? Did you have anything else to add at this stage?
Obviously, we've been pretty positive on Nvidia so far
Yes.
throughout this podcast, but I think it is just worth highlighting some of the key risks. And I think there's probably 3 to 4 key risks. One we've obviously covered, which is the valuation. So whilst we're saying it's probably got its valuation fairly and is sort of priced appropriately, it is obviously always a risk that they've got a lot of momentum to keep up. That they have to keep hitting these targets for that valuation to be accurate. So that's obviously one risk. The customer concentration, I think you mentioned it earlier, Tony. Yeah, about 40-50% of their revenue does come from Microsoft, Amazon, Google, and Meta, and we know they're large companies in their own right and have big R&D spends themselves. So there's nothing to say that eventually they could catch up with Nvidia and start to sort of take that kind of business away from them. So that's obviously a risk. We've got the geopolitical risk. I think you've said our majority of their chips are made by the Taiwan Semiconductor. Obviously, that's a risk. Just being totally reliant on them, pretty much, aren't they, for making these chips at the scale they need them made? And we know that that's quite a hot political potato, Taiwan, between China and America. So that's always a potential risk. And then, what's the saying? Your margin is my opportunity. It's going to invite a lot of competition into that space, and someone else could be the winner at some point unless Nvidia can continue to innovate, be ahead of the curve. That would be my kind of 4 key risks with the company.
Good point. Yeah. I think for the moment it does look quite strong, but what's your final comments, Awet?
When we look at the structure, the Nvidia, most of their revenue comes from data center. Even though we know that the car chips is rising, 90% of their revenue comes from data centers. So if you believe data centers is the future, Nvidia have an advantage. This is a great company, but the concentration risk from purely of one segment is one of the risks that I can see as well. To your point, Carl.
Yeah. Okay. Well, I think we've pretty much covered everything we wanted to say about Nvidia, although I'm sure we could talk for another hour.
Yeah.
I hope all the listeners have found that very useful. We'll be putting links in the show notes. We have a one-page company snapshot on the video, which will help you with your research. Please leave a review for the podcast on the Apple Podcast app, because that helps us with the rankings. Allows us to attract more quality guests along for when I do the one-to-one interviews. Thanks very much for your attendance, and thanks for your input, guys. You've been really brilliant as usual, Carl and Awet, and look forward to you joining us for our next show. Have a great day, everybody.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.